a comprehensive approach to financial health, to discuss the scope of traditional micro-lending in a fast-changing landscape. I'd like to invite our eminent speakers on stage. Our first speaker is Jiji Mammen, Executive Director and CEO Sa-Dhan, former CEO Mudra Limited, former CGM NABARD, and former Managing Director at Napfins Limited. It's an honor to have you on stage here, sir. Can we have a huge round of applause? And chatting with him is Mr. Pratim Bose, senior journalist, commentator, researcher, and consultant. Over to you, sir. I can assure you that this is a chat that you don't want to miss. So I'll request everyone to please take your seats. And sir, I hand over the mic to you to take us through this extremely pertinent topic. Thank you.
Good afternoon, ladies and gentlemen. I think with his vast experience in almost all sides of government's initiatives in financial, rural financing, development financing, and now in the industry. And the Mudra, that is the last thing that you took up for the government, has been hugely successful. So I'm sure it would be a 360-degree view. Sir, I'm sure this must be, the end part must be the most exciting part of your journey into this world. We have seen microfinance and microcredit as it was projected as the tool for financial inclusion. And from a parallel topic, it became a mainstream, it became mainstream of in banking sector, which has been epitomized by the rise of Bandhan Bank. Now, from there, suddenly, it took a different trajectory. So much so that in terms of financial inclusion ratings, today, India is above Italy, Spain, and probably just a notch above South Korea. And we know the ground realities like the banking account penetration and all these things. So I'm sure, how do you look at this whole journey and what would be the journey kind of in next 5 years or so? What is waiting for us?
Thank you, Pratim. Good afternoon to all of you. And let me first of all thank the organizers for bringing me here, and that to have a chat with eminent journalists like Pratim. So it's really, I feel it's my privilege, and I'm feeling honored to be here on this stage in this discussion with Pratim. Yeah, financial inclusion, you rightly said that we have, over a period of time, we have covered a long distance. But if you see, let me just go back a bit. If you see from the beginning, there has been some effort to bring financial inclusion or bring poor people under the banking fold. If I say, even in 1912, when the Cooperative Societies Act was enacted, that was also an effort towards bringing people to the financial inclusion fold only. Subsequently, after the independence, we found that nationalization of banks happening. We found that regional rural banks being created. We found that SHG bank linkage program, which came up in 92. I would definitely rate SHG bank linkage program, which is a microfinance initiative which started in the country, one of the major and massive program towards financial inclusion. It was basically to bring the women, especially the poor women, who was otherwise not able to reach the bank or get the banking facilities. They were brought together in a group. In a group mechanism, they were taken to the banking fold. And we have seen how SHG bank linkage program has it has unfolded in the last 30 years or so. It has completed 3 decades now. Almost 14 crore households or 14 crore families or the women are part of this SHG movement. Taking cue from the SHG bank linkage program, probably the microfinance institutions came in a different mode through the JLG, Joint Liability Group financing mode. And we have seen how from 2000 onwards, how the JLG movement has panned out. And in last 23 years, how much difference it has made. So in financial inclusion, I would say that there has been, and of course, subsequent to that, the real financial inclusion as a program, whether Reserve Bank of India or Government of India, which took it as a program in the term financial inclusion started in 2005, when Reserve Bank of India in a monetary policy, they for the first time talked about talking about financial inclusion, having bank branches and having bank accounts for the people. So then thereafter this Chandan came, all these changes we have taken place. So over a period of last 30, 40 years, I would say that the country has really progressed as far as financial inclusion is concerned. And in the last 5-10 years, it has really taken a leap. And the last 6-7 years, I would say, especially after the PMJDY, the initiative of the government, which came with the form of account opening, or in the form of the digital movement which came on. These are all part of this journey, and I find that India has really gone leaps and bounds, and we are in a position where we can take pride, especially the payment system which we are having, the UPI system, or the JAM Trinity on which we have our entire ecosystem is being structured. They are all something which are really an example to the entire world, and we are really reached a level where we can really take proud of it. So I feel, yes, we have done extremely well as far as the financial inclusion aspect is concerned in the last few years.
Oh. So just a quick take on the road ahead. I mean, a tectonic shift should, if that was a tectonic shift, then it should be followed by the next level of revolution.
Yeah.
And knowing digital, which is a very fast changing world. So what kind of changes that you expect? Just quickly, a quick bit of it.
See, digital is definitely, it has changed the whole, it's a real game changer for the entire process. Today, sitting anywhere, you can transact with any bank, you can transact e-commerce, you can start buying things, you can book your tickets, you can do anything you want. So the space, the distance, everything has become a thing of past. So this has really enabled the faster growth of the financial inclusion. And that is what we had been seeing in the previous session also, when they are discussing about the BC model. In fact, the BCs across the country, because of the technology, they are in a position to contact the last person and bring them to the mainstream banking through the technology. So technology has played the major role in this.
One interesting aspect is people think only the technology has progressed.
Yeah.
It is not merely a case of bank account penetration. There are many more important changes that has taken place in the economy. To give you certain examples, the below poverty line, the poverty ratio was 55% in 2005 and 6. It is now down to anywhere between 0.8% to 10% as per different estimates by the international agencies. So that's a major shift. If you take the whole macroeconomic scenario in consideration, then India is right at the cusp of moving to the next income level. And that is exactly where the government is coming in and projecting. With these changes on, we see that Mudra, now I saw the recent report that they are aiming to increase the ticket size. The point is that this is a changed country than what it was in 1991 when the economy was liberalized. And that should, ideally, that should reflect in its loan appetite, in its financial transactions. What is your experience?
Are you talking about the loan segments in the Mudra?
Yeah. When we started looking at microfinance, it was more like giving people extending a hand kind of situation. Today, it is these are our needs are different. It is about growth.
Yeah.
So ideally, his requirement for finance, his expectation, all should be different from now, from what it was.
See, there is a, see, if you see the country, we are such a large country with such a large population. And even today, around 70% of our people are in the rural area. And they are all, we can't say that they are reached a level, they can go into a next level of their, what do you call it, the living style. So there are a large number of people still who are not been, they have been brought to the banking fold, that's true. But their credit needs, have they been taken care of? So that is the reason why you have different segmentations. Microfinance is still relevant in the country. Microfinance, when you say microfinance is something which is, as per the recent RBI regulation, anybody who is having a income level of 3 lakh per month, per year, 3 lakh per year, is considered as a microfinance borrower, is an eligible borrower. So any household with a income level of 3 lakh can be treated as a microfinance borrower, and this itself is quite a large number still. So that microfinance will have to continue for some more time, but yes, that graduation has to take place, because we have seen in case of microfinance, there are several people who have reached a level where they can move into the next level of their business. So that graduation of being from the group to an individual entrepreneurs, that has to happen. If you talked about Mudra, in fact, let me tell you, Mudra, of course, I had the opportunity to be the first CEO of Mudra. So where we have 3 segments of loans, basically Shishu, Kishore, and Tarun. The name itself says Shishu means it's child. Kishore is a teenager or a balak or something like that, and Tarun is a grown-up person, a young man, an adult person. So this is what exactly the government also thought at the time of formation of Mudra. There has to be a graduation from a Shishu to Kishore to Tarun. That means somebody who is starting as a small business, a micro business, a nano business, has to move up from a 50,000 loan to the next level of 5 lakh loan, and to the next level of 10 lakh loan, and maybe to a further upwards. So that graduation process has to take place, and that is very much important, and that is what we have to aim at. Now, one of our focus as Sa-Dhan, let me tell you, one of our focus is that we have been telling the members that we should try to bring the right kind of individual entrepreneurs out of the groups and try to develop into individual entrepreneurs of sizable business, so that they can grow and they can become, they can increase their business level, the income level, as well as they can also start providing employment to others. So that graduation definitely would take place. But I still feel there is a room for the Shishu category of people, loans, and even to the lower to that. Let me tell you, there are a sizable population in the country who has been still not touched by the microfinance institutions also. We call them ultra poor, who are not been able to come to even to the microfinance level, because they are basically hand-to-mouth subsistence they don't have. So in such a situation, probably bringing the microfinance, ultra poor to a microfinance level, that itself is quite a challenging task for all of us. So that segmentation of loans and segmentation of category of the business would continue, and that has to continue, and it will continue for some more.
So you don't expect any redefinition of microfinance is necessary at this moment?
Pardon?
Any redefinition of microfinance is necessary at this moment? Like, as you said, the 33 lakh family income cap, or etc.
See, microfinance is basically what? It's only a categorization for a set of people who are having a loan income level of 3 lakh and above. But nobody says that 3 lakh and above should not be financed. So there has to, if you see in the new regulation also, there is a larger window for the non-qualified assets, that is non-microfinance loans. They have made it 25% can be in the form of non-qualified assets. So that much leverage is there as far as the microfinance institutions are concerned for providing loans beyond 3 lakh. So they should be looking at the individual borrowers who can be graduated to a higher level, beyond the 3 lakh level borrowers. They should be seen as a separate category and they should be looking at financing them. So I'm sure at the moment, in fact, this is a point which we have been discussing with the Reserve Bank also, because at the moment, if you see the rejection rates, there are a large number of rejection takes place because their income level is going beyond 3 lakh. So we were saying that probably there should be a decision of increasing that level. But then Reserve Bank also said that probably this itself is still a huge number of huge number of people are still in this category. So let's take their interest first. And also those who are growing up, they can be considered separately. They can be financed under the non-qualified assets category, or as a bank can pick them up and start financing them. So that's the way it should go.
The next thing is, of course, digital. There are a lot of concerns, but fact remains that digital is a process that you cannot reverse. This is an irreversible process.
Yes.
There are now, the smartphone penetration was supposed to reach 96% in 2040, as per some projection sometime, some 5 or 6 years ago. And I saw the other day that it has reached 85%. Now, what it means is, forget about percentage point, all the gender gap issues in smartphone ownership and etc. are going to be erased in no time, and people will have smartphones.
Very right.
That being the case, and we are seeing an interesting reflection in numbers.
Yes.
I was just checking Paytm's numbers in December quarter.
Yeah.
And if you take in December quarter, their total disbursement was 10,000 crores. The disbursement in December alone was 3,600 crores. And these are 4 times year on year. I mean, the numbers are very unsettling for me, to be very honest. There are issues with digital lending, like predatory lending can happen. There can be issues of, as the previous panel was discussing about these fake apps and all these issues are there. But having said that, there is little doubt that this is a disruptive change that has happened in the industry. Now, does that or shouldn't that mean the end of the SHG model, beginning of the end of the SHG model in microfinance? And whether this, what is your expectation from the regulator? Is at this, regulator, don't you think that the regulator should be a little more fast forward in fast paced in its policy making? And finally, what would be the role for the traditional microfinance, microcredit lenders? Are we going to see a consolidation in the sector, which we saw in many other sectors post liberalization?
I think, let me just, you have covered 2-3 areas. So first, let me say how digital is going to compete with the group mode. That was one of your questions, how SHG will become relevant or JLG will become relevant. How see, I still feel digital is, of course, it's an enabler, no doubt about it. It is going to enhance the penetration much more faster way. There is no doubt about it. Already we have been seeing I would say that microfinance institutions are one of the early adopters or one of the quick adopters of technology. In 2015, that was the first time then microfinance institution, many of the microfinance, I won't say all the microfinance institutions, the bigger ones especially, they started onboarding the people, onboarding the borrowers directly in the field through the devices, handheld devices. It could be a tab or it could be a mobile, those kind of things. So it started in 2015. So now most of the MFIs, especially the bigger ones, NPOC MFIs, are doing the sourcing through the devices, handheld devices. It could be a mobile, or it could be tab, or whatever it is. Many are doing the processing online. Disbursement was almost 100% disbursements are happening digitally, online. So especially with this Jan Dhan account being having reached a level where almost every borrower has a account now. So disbursement through the digital mode is now an easy way. So that has been happened, especially with the demonetization. That is something which that was some I would say benefit which accrued out of way, although it was not intended for. But one of the thing which one of the benefit which accrued out of that demonstration is that digital transaction enhancement in that.
And probably that was advanced by COVID once again.
Exactly. See, I would say in every challenge or every challenge which this industry was facing, they have taken it as an opportunity to innovate in one way or other. So when demonstration took place, the payment of transfer of fund was difficult through the physical mode, which was hitherto done by the microfinance institution. So they moved into the digital mode of payment. So now almost 100% digital payment is happening. Now even documentation takes place digitally. And now collection. Collection is one area which is not that picked up very high, but still it is happening to a higher level, in the sense the actual digital payment through UPI mode or through the UPI mode takes place around 10 to 12% in the industry. But if you see the payment transfer of funds through the CSPs, that is like your Spice Money and those kind of the agencies, it is as high as 30%. So that is also happening. So digital has really, the technology has really enabled the whole process in the microfinance system. But I would definitely feel that it is not going to take away the entire process of microfinance lending, because it's a high touch activity. Unless you have a high touch point, unless you have a connect with the people, this lending will become something like any other lending. Why you are having 98% recovery or 99% recovery, 100% recovery? Basically because of the field connect you have. The moment you remove that connect, it will also become like lending through any other system. So that is why I feel this fintech you talked about, the lending through fintech may not become a challenge to the JLGs, because one thing is that I don't think fintech has the reach of the microfinance institution to connect with the people and ensure that the recovery takes place, I mean, in a 100% way or 98% way, the way it is happening. That is number one. Number two is that the kind of trust which the earlier panel also talked about, the trust factor. See, so the people who we are talking about in the microfinance sector, the bottom of the pyramid, the segment which we are talking about, they're still not comfortable. They're not still not confident. They're not still not having the capability. They don't have the kind of devices for that. They don't have the kind of comfort doing these things. So the SHG, JLG lending mode will definitely continue, but they can be supported with the digital process so that it becomes much more efficient, much more quicker, much more easier for the transactions. So this is going to happen. This will continue for some more time. At least I see another 5-10 years, this is going to happen.
Okay. Now, you see, I understand your touch point. That is what is the MFI industry sells most, that the high touch point. But why high touch point? This is because of the credit rating. Even your foot soldiers are the best. They ensure the creditworthiness of a person. Now, given the digital framework, the moment someone is transacting, the local pawn shop, the small kiranawala and the fruit seller, everyone is transacting through UPI. So clearly that is creating his credit worthiness.
Right.
Okay. So the credit worthiness issue will soon be tackled by technology.
Yeah.
On top of that, technology is eliminating that huge cost, delivery cost of loan. So, and we are seeing the app-based loans are distinctly cheaper, 7-8% cheaper. Now, now access to credit is also includes the cost of credit. So finally, for the traditional segment, what I understand is that the traditional segment, they have to reduce costs to compete with this segment. How should that happen?
I would agree with you. Fintech would be in a much better position to provide a much cheaper loan than a MFI. Even today, if you see, we have different lenders in the ecosystem. You have banks, you have NBFCs, you have NBFC MFIs, those kind of things, or fintechs. Different segments has got different rate of interest. Banks are the cheapest. They can, if you can get a loan from the bank, you can get it maybe around 8 to 10% or 12%. NBFCs may charge up to 15%. But MFIs, which charges around 24 or 25%, they also existing into the ecosystem. So I feel taking into the size of the size of the country and the size of the population and the size of the economy, there is space for everyone. Of course, this fintech also will continue to be there, and the MFI also will be continuing to be to there. Banks also will continue to do their business. NBFC also will continue to do business. I'm sure this all this can coexist better. But what I feel is that fintech cannot become a competitor to the MFIs, mainly because of the kind of the services which MFI is providing, basically because of the physical touch they have, because of the kind of the human transactions they do directly. That makes much more comfortable for the people. We heard in the previous session people talking about that, the trust which they develop, the comfort which they develop. So these are things which is going to continue, and I don't think but I will definitely say that it is cheaper. Fintechs could be cheaper, but they can't become they can't displace MFIs. They may take away some business, but they will not displace MFIs.
Right. No, my idea is, I understand that, there will be space for everyone.
Yes.
But the question is, who will take the main stage? That is the basic idea. Now, the whole MFI industry is aimed at giving loans. And the financial inclusion has a wider, landscape. The market participation, equity market participation in this country is 5%. It was 3% 30 years ago. Mutual fund participation is 12 to 14%. This access to government schemes, that itself is there are some, I was reading somewhere there was 100 or 200 different schemes of government, state, central, put together. People don't know about its existence. Okay. So there are many products which can be sold out. These things are, don't you think that MFIs had the foot soldier model that had more relevance in terms of selling products, different products, than giving loans? Because if the app makes the loan available, I mean, you and me, whosoever it is, will finally take it.
I fully agree with you. I fully agree with you. The MFI has to move to the next level of the activity, which includes not just giving loan and collecting loan, which, as you rightly said, even a fintech or even anybody else may do it. But they have to. In fact, if you see, after the COVID is after the COVID has subsided, the group mechanism, group dynamics has not come back to the original shape. Because people see, if we are going to the groups only for the purpose of collection, I can always send the money through somebody else or through the digital mode or whatever way I can pay the money, if that is the only occasion. But originally, if you see, and which I still feel SHGs are still able to do that, they bring some kind of a credit finance plus activities in the groups. They do a lot of empowerment activities in the group. They have some social activities. They do some kind of learning by being in the part of the group. So those things have to be there. Even MFI will have to, of course, many of them must be doing that. Some of them must be definitely doing that. but they have to make this group much more interesting, and it should be beyond the giving and taking of money. That is one. And earlier also you asked what should be the next stage of financial inclusion. In fact, financial inclusion, when we talk about, we normally talk about the bank account opens only. Bank accounts only. We talk in terms of bank account only. But whereas all those products which you talked about, whether the insurance, whether it's pension, whether it is the other kind of remittance facility or a payment system, it's all far below the level which was expected.
And these are expanding markets.
So that's all. So naturally, you have to move into the next level of services which can provide all these services. So some of the MFIs are already doing. They do some kind of they be part of the insurance and they do some kind of a cross-selling of insurance product. Otherwise, also they do a credit-linked insurance for all the borrowers. But other than that, they also do some hospital cash insurance. Some people also do some general insurance products also. But then it has to become much more larger way. I do agree that the group, if SHGs and JLGs have to continue, just lending and taking money is not the only thing. They need to go much beyond that and make the group meeting much more interesting and make it attractive to the members to come and be part of it. Then only it can go forward.
Sir, having served having worked as a journalist, economic journalist for 3 decades, I have a perverse view to the world. This is, I measure the potential in an industry from the level of merger and acquisition activities. Okay. And so the death of a few do really excite me. Now, the question is, in this sector, we are yet to see many deaths. We are yet to see many merger and acquisitions. It is still, like stable. And that stability is always very unnerving to me. I keep thinking that a storm will be coming. So, say, for example, MFIs have access to consumer data, actually. And right at this moment, it is that data which is the most priceless data.
Yeah.
But why we are not seeing that? I mean, or is it the moment when that should start? A lot of integration, maybe tech company buying an MFI buying a tech company kind of situation.
See, for your information, there are deaths happened in the industry. It's not that it's not at all happened in the last, if you see the last 2-3 years, at least 3 MFIs have gone down the drains. There are some 5-6 acquisitions and taking over has taken place, including recent one is one. Sonata has been taken over by Kotak Mahindra Bank. Before that, BFIL, that is that old SKS, that was taken over by IndusInd Bank. Then there was another company called BSS in Mysore area, which has been taken over by Kotak again. Then so most of the private sector banks have acquired one MFI or other. That is number one. Mergers have taken place. Like I know Madura Microfinance has been taken over by the Grameen Kuta. They have taken that. There are Northern Akas and taken over. There is a MFI called Smile in Chennai. There is another one that Ashirwad Microfinance. They have been taken over by the. So there are so many that is happening. It is not that it is not happening. And at the same time, we are also seeing some new MFIs coming up also. And in fact, that should be the process. I would feel that the whole moment of this institution should be in such a way that it should be, I would say, there has to be graduation within that also. Like your MFI is becoming SFBs. SFB is becoming a universal bank. Or when before they become an MFI, they must have been only an NGO. In fact, if you see the Bandhan itself, Bandhan's journey itself, if you see, it started as an NGO, became as an NGO MFI, then became an NBFC MFI, then became a universal bank. So that kind of a journey will continue. At the same time, we should also have more and more number of newer MFIs coming up in different parts of the country. For your information, let me also make a point that even today, when we are talking about the the microfinance institutions penetration, the penetration is concentrated in a limited area. About 82% of your microfinance portfolio is still held in 10 states. 56% is in 5 states. Top 5 states have 56% of the portfolio. About top 100 districts will have almost 85% of the portfolio. So there is a large area which is still not covered. That's why I said there is a huge scope for microfinance to still exist and to grow. Only thing is that you have to find the right kind of place and right kind of space to move around. So yes, it is happening. As your question, I'm saying that there are deaths happening. There are 3 deaths have happened recently, which I know. Earlier also, when Andhra crisis took place, there are a few went down the drain. So it happens, and taking over also is taking place. That is a continuous thing, and that will continue, and it has to continue also.
With that, thank you so much. Thanks, Mr. Mammen. I hope we could keep you awake in this hour. That would be our greatest achievement. Thanks.
Thank you. It was nice talking to you, Pratim. Thank you.
Thank you so much. Some really important lessons and insights to be noted from that discussion.